Good afternoon, everyone. Pitnell speaking. Welcome to this seminar on expat tax. I've got the specialist here, Hugo,
Thank you,
to take us through. I just want to tell you why we're doing this and then hand over to Hugo, and I will do one or two things as well. It principally relates to the Section 1010 exemption, Section 1010 specifically, Roman 2, and what I found in answering the technical queries that came from SAID members on the SAID helpline is that there's absolute, I think, apart from confusion out there, is absolute misconceptions. People don't understand what's at issue here. And we'll deal with a lot of that specifically, are absolutely in the dark when a person ceases to be a South African resident or what that implies and things like that. So the main purpose of today was to deal with that, to deal with the changes that will take effect on the 1st of March 2020. But everybody seems to be asking the question relating to Section 1010. And I'll briefly run through some of the items there quickly before I hand over to Hugo. And this is why we're doing that. Okay, so Section 1010 essentially applies to remuneration. We'll speak a bit about that as well. And the change is that where previously this was totally exempt from normal income tax in South Africa, it now is only exempt to the tune that it is below R1 million. It deals with employment income, not with income earned as a subcontractor. That the person earned during the year of assessment, and then it applies to a bit more or a different definition of remuneration. So they actually define that remuneration by saying by way of salary, leave pay, etc., Section 8 and things like that we're going to speak about specifically. So this is, the purpose is to, in the context of Section 1010 exemption, and let's just say the changes to that, it will happen on the 1st of March 2020, to look at the issues relevant to that, and then also tax immigration or financial immigration. So, okay, Hugo?
Okay.
I'll hand over to you.
Thanks, Peter. If we can stay on that slide. And so it's very important that we understand that the word remuneration does not appear in Section 1010 Roman 2. We have, because of the way that we have to explain to our clients that their rental income in South Africa and their interest incomes remains taxable, we've started using the word remuneration. So it became a word we used, yet the Tax Act, in this specific part of the Tax Act, does not use the word remuneration. It goes to say any salary, leave pay, wage, overtime pay, bonus, gratuity, commission, fee, emolument, or allowance. So the critical ones, commission. So even if you're a person without full-time employment, but you're getting commission, then you are exempt, to the extent that it was earned abroad. And then it says, including any amount referred to in paragraph Roman 1 of the definition of gross income in Section 1, or an amount referred to in Section 8. And that Section 8 we'll deal with a bit later, is very problematic for most of us. Okay. Then 8B and 8C, Cap B, Cap C, and just for those who don't know, that is the share incentive schemes. The B is the share incentive schemes in terms of BE schemes, and C is for management. And it's respect of services rendered outside the Republic. In respect of services rendered outside of the Republic. So you can't use the days that you are outside of South Africa, but the salary is paid by your South African employer, but you're not working. So those days do not qualify. And it must be on behalf of any employer. So self-employed and then the contract workers are completely out. So that of any employer is not defined in Section 1. So it's more a labor law definition than a Schedule 4 or Schedule 7 definition. So let's now try if it now works.
That's it advance.
Okay. We'll do it manually, don't worry.
Okay.
Okay. Right. So interesting. This is the workshop we attended yesterday. And the workshop was set from 9 o'clock till 1 o'clock. And I think we finished just before 11. Okay. So as one of the treasury guys said, you guys paid for the muffins, go and eat it before you go home. The message that came across yesterday was very clear. Treasury and SARS are not interested in policy changes. This is here to stay. The 1 million, they're not going to increase it. They invited us to do presentations, but they are more worried about implementation. But I got the distinct feeling, and I'm brave enough to say that the Treasury guys have no understanding of the practical problems we are facing. The SARS people dealing with it doesn't know the entire act. They only know dealing with that part. So, for example, it was quite evident that the SARS representative there did not realize that pay-as-you-earn is triggered by payment. So in Schedule 4, it's not on the day of accrual, it's the day of payment. So let's now look at March 2020. I'm sitting in South Africa. I second you to our subsidiary in England. The subsidiary pay your salary. The employer in South Africa paid nothing. Therefore, there's no pay-as-you-earn deduction yet. So you're going to pay that tax on assessment, which makes you a provisional taxpayer. So there's a consequence that no one thought of, because now you're earning income from a deemed or connected employer, which now puts you in the provisional tax event. So there's a lot of small little subtle things, and I don't know all of it. So you guys must please, where you are running payrolls, answer and send us some emails. I'll just briefly tell you the other one that came up, where I must say neither SARS nor Treasury understood the question. If you at the moment work outside South Africa and your employer knows that you have been out more than 183 days, they must use on the IRP5 code 3652. That's the exempt portion. How is the South African employer going to know what to use 3652? Are they just going to use the first million? Because quite interesting is that if you work, for example, in Nigeria, what appears on their payroll is not an allowance. They don't tax allowances. With the result is that you may want 3652 code to be used for the things not appearing on your Nigerian payroll. Now your employer or the holding company in South Africa is using 3652 for the first million of cash salary paid to you. And they'll have to bring another code. And we suggest that the code must no longer be tax exempt. You must claim the million on your assessment. Your employer cannot do your assessment for you. The second part is, I specifically, and it was a question I asked, I specifically look after a multinational group, not a big one, but they have staff in Malta, England, and Australia, typical Commonwealth countries. Some of their staff in Australia is on work permits, so they remain tax resident in South Africa. Another staff member is a South African passport holder, but she's married to an Australian husband. So in terms of Australian rules, she's tax resident in Australia. So now the employer must know whether you're tax resident or not tax resident. Our POPI Act actually protects you that you don't need to tell your employer where you are tax resident. But I can see employers turning around saying, I'm going to deduct pay-as-you-earn until you bring me a tax residency certificate from Australia, and perhaps go so far and say, I want a letter from SARS, that they also treat you as tax non-resident. So now suddenly we have a conflict because SARS are placing an obligation to deduct pay-as-you-earn on amount that an employer in South Africa did not pay. And the exemption is determined by a very, very personal matter, which is not always at the knowledge of your employer. But anyway, so now let's go back. And that is, I think, where in the intro that was on the webpage for the invite, we call it the financial immigration wars. Because some people say the only way to then solve this problem is to financially immigrate and give that Reserve Bank code to your employer, because that's evidence that you tax immigrated, and it's not always. We'll deal with that later. So let's break down section 10.10. The first thing, it's remuneration derived by a person as and 10.101 now is totally different to the one that we discussed earlier. Okay, so the one that most of us deal with is normal employees, but 10.10 Roman 1 is a specific group of persons. Okay, and now it uses the word remuneration, derived by a person as an officer or crew member of a ship